In this video, we are going to be analysing Roku. So to get straight into it, firstly, we do want to know we are now down at another 52-week low. Things did temporarily look good for Roku. We did see this kind of pump that originally happened here. This was, I think it was Netflix who was expected to be buying up Roku, and that's why you got the move, and obviously it didn't come out to be hold true, so we have just continued to fade. So what are going to be those key levels that we're paying attention to? And really basically where we are now is a key level, because you can see this is our statistical mean on the 6-month chart. So really, if we break this level, we just touched it today, we would now expect at least a bounce off this level. But if we do break this, or if we bounce and then come back down to break it on the retest, what you want to see is a break below, come back to retest it, and if you see selling pressure kick in, then this is going to cause big concern from the technical side of things, because this would confirm more or less a move to our next statistical level, which in this case would be $20. So obviously this would require a massive sell-off on Roku, or actually $25, as that is our closest level. That is our first deviation on the 6-month chart. So if we break that level, that will create some big concern. On the other hand, if we can kind of hold this level, we maybe bounce, come back to retest it and hold it again, then you could expect a move to the upside, and then we'll be looking at $81 and $96 as those two closest levels. But obviously, as this stock has sold off, I mean, we were at $350 earlier this year, well, basically at the end of last year, and now we're at $50. Considering how much this stock has sold off, all this has done is made the deviations very wide, which has made levels very difficult to kind of get to, because from this $50 level, you know, that would require a 50% increase in price, and to sell off to that 25 would also require a 50% move. So really, that's the only problem we have on Roku right now, is levels are very far off. So if you were looking to trade in between these levels, we would be paying attention to this key psychological levels. So $45, $40, $35, $30 to the downside, and if you're paying more attention to the upside, really we'll be paying attention to until the break of this high. So from the 65, the 70, 75 psychological levels could definitely all have an impact. Now, one thing to note, yes, these are our levels that we would be paying attention to, but obviously do note fundamentals are always going to be the key driver of stocks. If rumors come out, if actual news comes out, or if they have very strong earnings, this would be a reason for the stock to move, and then the technical levels aren't going to matter. The only reason you use technical levels is to find a good entry for a stock you already have a plan for, and that should usually be a fundamental reason for you looking to enter that stock. Whether that's short or long doesn't matter. Technicals are usually just used to get that better entry. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these two analysis videos.